What's up guys, Kevin Cage here with another crypto update. Hope everyone's doing well. In today's video, we're going to dive through a bunch of information related to Bitcoin cycles, future valuations, and more. So we're going to kick off this video discussing the Bitcoin cycles, the length of these cycles, the different cycles that we see during these bull runs as well, timed with US elections, global debt refinancing, the Bitcoin halving, stock market rallies, you name it. And then we're going to dive into iTrustCapital, where I've had a Roth IRA in crypto with them since January of 2020. I was with the previous provider before that. And share why I have a 100% tax-free crypto retirement account over the coming years. First up, so comparing the size of the crypto asset class today, its total market capitalization, it's at 1.4 trillion. Its all-time high was at 3 trillion. Now for this crypto asset class to go to zero to over 1 trillion to even as high as 3 trillion just over the past 10 years is a really big deal. But when comparing that $1 trillion to other global asset classes, other markets, other indices, it's really not much. Especially considering all the inflation and monetary printing that we've seen over the past several years alone. Even looking at history over the past couple years, remember 40% of US dollar or the total supply of USD was printed over the last 12 months. Back in 21. So crypto sitting at 1 trillion, the global stock market or global equities market over 100 trillion, the global bond market over 100 trillion, global real estate hundreds of trillions, global derivatives hundreds of trillions of dollars. The big range is 500 trillion to over 1 quadrillion because it's very intangible. And even the S&P 500 index is over $30 trillion in market cap today. And remember that market cap is just a social construct. There is not $30+ trillion actually liquid if everybody sold. So it takes far less money to actually get a high valuation in terms of market cap. It's also worth considering the trillions of dollars in notional and nominal value in a variety of asset classes and markets, such as the global alternative investment market is projected to reach over 18 trillion by 2027. We have commodities, and then we have things like intellectual property and patents, which account for 30% of the S&P 500 value. So we get it, there's a lot of money and a lot of value in the world. And a lot of new people first looking at the crypto asset class or looking at prices or anything during a bear market immediately think it's a joke, but these markets are cyclical. So whether you believe in the Bitcoin halving or any other narrative, what we can agree on is that the big bull runs historically have happened every several years. The rise of cloud, Linux, mobile phones, even the internet took decades to actually mature. And there were large organizations like IBM that were aware of these tectonic shifts, just like Linux reaching over 3 billion users in operating system. So when we see the Hyperledger Foundation getting into crypto assets, enterprise-grade utility using private, public, and hybrid networks, I think it's a big deal. We know Accenture, we know the Depository Trust and Clearing Corporation. If you've never heard of this group, I encourage you to go check them out. If you watch some of their video interviews, they say verbatim, which we've shared on this channel many times before, that they were the Federal Reserve or the Fed before the Fed existed. And we have a variety of groups. We have Deloitte, some of the big four, a variety of crypto projects that have public networks as well. And this is just one example of a foundation or consortium of a variety of organizations working on enterprise-grade utility for DLT. And per the tokenization stats from a variety of organizations such as Swift, estimating the volumes of tokenized assets could reach 24 trillion by 2027. Or BCG, by 2030, the tokenization of global illiquid assets could reach 16 trillion to as high as 68 trillion. And you can find all of these reports online, going over the numbers. I definitely recommend reading if you have time. In the WEF, estimating the tokenized market is estimated to be 10% of global GDP by 2030. So, global GDP is well over 100 trillion. It's likely going to grow to 130 trillion, 150 trillion, and so on over the coming years. Even if we only get 5 to 9% of global GDP by 2030, that is a huge sum of money, well above even 5 to 9 trillion. And besides other asset classes, markets, or indices, there's a variety of industry verticals that crypto is playing a huge role in. And we're seeing tokenization happen today with some of these public networks. So Aberdeen is a wealth manager. They have over $600 billion AUM. I know in previous videos and the interviews we shared that Aberdeen has tokenized, I think, $20 billion this year. So they're actually tokenizing their money market accounts. And they also are leveraging Hedera. Now let's dive into the Bitcoin price chart and take a look at the altcoin market as well. So we know Bitcoin was born in 2009. We have a variety of cycles over the past 10 plus years, but I'm actually just going to look at the previous two cycles when the altcoin market was getting established and Ethereum was born in 2015, giving rise to actual smart contracts and application. Now here's the Bitcoin price chart versus the US dollar on the weekly time frame, looking at the previous two bull runs and what have we seen. This purple moving average is the 21-week EMA, and you can see during bull runs en route to an all-time high price, we have used this as support, sometimes even wicking below it. We can see candle bodies for the most part have been tapping this level on the way up the entire time. We poked above and actually fell back below this level, and then the next cycle began in tandem with the Bitcoin halving in May of 2020. We also used this level as support on the way up. And today the Bitcoin price chart is currently above the 21-week EMA. So for the possibility of the next cycle, the next bull run, and potential of all-time high prices in this asset class for several assets, we need to maintain above this level. So if we were to follow anything similar or even a rhyme from the previous 2 cycles, we should stay above this level around 31,000. So that was the weekly price chart. Let's look at the monthly price chart for Bitcoin leveraging the 8 EMA. So the 8, 21, 34, these are all part of the Fibonacci sequence. And we can see the last 2 cycles during the bull run, we maintained above this level and even used it as support. So everybody has their own perspective in this market. Some people think Bitcoin is going to be drawing another wave 3, another wave 5, depending on how you count it. And others might think that Bitcoin is crashing below 10K to close that open CME gap. What I believe is the crypto asset class in Web3 is here to stay, and we're likely going to create another all-time high price in the future. And that's just my opinion. I'm not telling anybody what to think or how to think. I'm just sharing how I think and how I form my opinions. And looking at the RSI, this is an oscillator that measures the momentum. We can see each time it is above the purple, over 70, and overbought, we are actually creating a new all-time high price for Bitcoin. Bear market begins, massive crash, lasting for several years until powering up again, and we can see once we pierce here, we are going into all-time high prices. So historically, every single time the RSI has pierced above 70, over purple, into the white here, we have gone into all-time high prices. And we've done it multiple times, here, 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 and then here. So just looking at this and looking at these cups and how they draw and measuring the length of time, which we'll get to, I believe that Bitcoin, even though it's not my biggest holding and I don't believe in it the most, I believe that this asset class goes to an all-time high price. And that's one of the many reasons why I have a Roth IRA in the crypto asset class to capitalize on these potential returns. Even if you only had a $1,000 Roth IRA just to have long-term exposure over the coming years, I'm taking that bet. And we're above the 8 EMA again. Some people believe we're going to do another March 2020. Others believe we have that chance for new all-time highs. And I believe the latter. I'm a long-term investor. I think all of the price action during a bear market is pure noise. As the monthly RSI is beginning to climb with the potential approval of a Bitcoin and Ethereum spot ETF in 2024. In the AUM of all the asset managers that applied for a Bitcoin spot ETF, which means it has to be backed by real Bitcoin, is over 17 trillion. Even allocating 1, 2, or 3% in the future could equate to a couple $100 billion in buy pressure. We've also spoken about the Bitcoin halvings. We have 1, 2, and 3, and they've all led to new all-time highs. Is history going to rhyme, or is it going to be different? The Bitcoin halving is in April of 2024. In measuring the cycle lengths using the high of the oscillator when momentum was at an all-time high until it broke into new all-time highs on the price chart, we can see 1,200 days. Our last cycle was 1,096 days. If we take the exact same measurement from the previous 2 cycles at the high of the RSI, we're getting close to 1,000 days. And taking the same measurement, looking at 1,100 days, even 1,200 days, this still takes place in 2024. Only if history rhymes for a third time. And looking at the total crypto market cap, we can see the same thing with the monthly RSI and overbought, momentum at an all-time high breaking into new highs multiple times. And even looking at the market cap excluding Bitcoin, so this is Ethereum and every single crypto asset. We're back above 50, or the middle line, which is a bullish sign, but we have to stay above this level to keep the momentum up to potentially reach all-time high prices. We're still in accumulation, although we're retesting these highs. It's great to see. We have to close a monthly candle above this level entirely. Then I'll definitely get more excited for the crypto asset class. I know we've had some assets pop, but the majority of them get the highest ROI only when Bitcoin is pushing into an all-time high price. So I'll believe it when I see it, because this bear market thus far has given me trust issues. And one last thing before we touch on some important practices if you hold crypto. Let's look at the total market cap of the crypto asset class. Even measuring from the high until breaking into a new high, this is over 1,100 days. The last cycle was 1,078 days. My point being is that if this cycle is similar in length to the previous 2 cycles, this still takes place in 2024, even if that means the end of the year. And remember that this is only considering the number of days until breaking into a new all-time high, but the majority of the gains in the alts when they run are on the way up. And that means if we did follow even the similar lengths of the previous 2 cycles, the gain should be occurring a lot sooner. And the difference between having a very good low entry during the bear market and just catching on the way up is huge. If you had ADA at 5 cents during the bear market, it went to an all-time high price. That's over a 60x return. That's plenty of opportunity to get a 10x, if not more. But if you were late and didn't enter until we were closer to an all-time high price, we're talking 200% or a 3x. So I know a lot of retail investors on Twitter say entries don't matter if everything goes to the moon, but for me it matters massively. To be able to buy an asset, accumulate it, and have your average entry as low as possible and try to sell as high as possible. A lot of people find a great project, they FOMO, but the probability that you are buying the exact bottom is very low, so there's no need to rush into anything. Research the project, sit on it for a few weeks. So now, considering all of the information we've gone over in this video discussing the asset class size, the potential valuation in the future, tokenization stats, market cycles, etc., we're going to dive into iTrustCapital and share a few very important points. So we have iTrustCapital linked in the top of this YouTube video description and in the top of the pinned comment. This platform is free. There are no monthly fees or anything like that. This is a crypto retirement account platform. If you use the link below to create a free account, you get a $100 funding reward in USD. So most of you guys know that iTrustCapital was last valued at $1.3 billion, so this is a unicorn company with over $7 billion in transactions. If you're one of those people that don't believe in retirement accounts, you don't have a 401k, you don't have a Roth IRA in the S&P 500, and you don't care about having exposure in crypto, this may not be for you. But it was a great fit for me because I rolled over one of my Roth IRAs years ago that was in the S&P 500 into crypto, and it has done substantially better, multiple X's. Rather than just having my retirement in the S&P 500 making 7% a year and maybe doubling your money in 10 years. I want to diversify my investments in asset classes and also vehicles. So I definitely recommend checking out iTrustCapital if 1, you believe in crypto, 2, you want to have long-term exposure, and 3, you want to diversify and have a vehicle like a Roth IRA so that all of your gains grow 100% tax-free. And if you got that killing in crypto, you're not paying 20%, 30%, or even 37% in taxes. You are paying 0. And you don't have to bet the farm. You can start with as little as $1,000 and just hold it for long term. If you made really good money in future bull runs, you could roll it back over, go back into the stock market, go with Vanguard or any other custodian. We can see Beluga spent 20 hours curating the top crypto IRAs, iTrustCapital up top. The one I was with before iTrustCapital back in 2019 was Bit IRA. The fees were just outrageous. It didn't make sense. And considering that iTrustCapital doesn't have those custody fees, management fees, and $0 for monthly fees, I can just set and forget and hold it long term. I don't even have to trade. And if I do trade, I can go right into the US dollar. I don't have to trust a stable coin with counterparty risk, USDC, USDT, etc. And it's just a 1% transaction fee whenever you buy and sell. So essentially the same fee structure as Coinbase, except my assets are held in enterprise grade cold storage, and all of my gains and profits in a Roth IRA grow 100% tax-free. So I'm paying 0% in capital gains rather than paying capital gains with Coinbase. They have a great selection with over 30 assets available, and I imagine over the coming years they're going to have 50, even 100 assets available. And I know in the United States a lot of people think crypto is a joke, but there are big things happening throughout the world, such as Dubai and VARA, their regulatory authority, approves XRP under the virtual assets regime. So they approved the digital asset XRP for use within the Dubai International Financial Center. And just to emphasize how big the DIFC is in Dubai, they are comprised of 72 countries with $8 trillion in GDP combined with a 3 billion population. The Middle East, Switzerland, Japan, the UK, they are moving forward with crypto. And they'll now be able to incorporate XRP into their virtual asset services. So when I'm looking at assets in my retirement specifically, rule number 1, I don't want to lose my retirement, or specifically the amount of my retirement in crypto. So I want to have a good chunk of my portfolio in assets that I believe have great long-term potential. Tons of funding, real developments, actual live partnerships. Because I believe if you're right with just a few assets over the coming years, even decades, with a Roth IRA, it could be huge. Now, iTrustCapital put out this article, What Happens to Your Crypto When You Die? In future videos, I can try to talk about estate planning and asset protection, and these are all important. And there are pros and cons wherever you decide to store your crypto. I diversify my holdings. Some of my holdings are on hot wallets. Hot wallets are connected to the internet, so it's easy for me to use, but it's more susceptible to cyber attacks and I could fall for a scam and lose my funds. Cold wallets or cold storage are great for long-term holds because it's kept offline. But then it can be a pain in the butt to access your portfolio or rebalance or even make trades and then send it to an exchange. And when managing your crypto without a third-party platform, there is no option to designate a beneficiary whatsoever. If something happens to you, oh well. And proper estate planning would be your only option. While a crypto exchange might be easier, it has benefits so that you can trade, you can scalp, you have access to your funds, and some investors keep some of their assets on an exchange. Definitely helpful for anybody doing trades or scalping. You can buy and sell whenever you need. However, exchanges operate on balance sheet, where client assets may be commingled with a company's business operations, putting client funds at risk. And crypto exchange hacks happen on a regular basis, so you are putting your assets at risk. Even phishing scams like a fake Coinbase website that looks legitimate but there's a subtle change to the characters in the URL. If you go to that website and type in your information, the hacker can have your login info, so that's why it's super important to have two-factor authentication. If you only use SMS as your two-factor or TFA, you could be in trouble because SIM swapping does occur. So some people would use a YubiKey, which I've linked in the video description. Others can also use Google Authenticator. There's no right way. Security is just about creating as many layers as possible like an onion. Another option is using a third-party chartered trust like iTrustCapital, and they leverage a qualified custodian. So if they go out of business, I still legally get my funds. So this option is like an exchange where I can buy and sell my crypto 24/7 from my PC or my phone, But iTrustCapital doesn't operate on balance sheet like exchanges. A third-party regulated chartered trust operates off balance sheet, where our assets are held on a one-to-one basis and client assets are never commingled with the company's business operations. And by leveraging iTrustCapital with the Roth IRA, I set up my beneficiaries in just a few clicks right when I started my account years ago. So if I pass away, my loved ones or designated individuals will actually get my assets. And this is just an additional benefit of leveraging iTrustCapital. You can set up your personal estate planning to track all of your assets or crypto wallets that might be staking so that your loved ones have those private keys and can access those funds if you pass. But anyways guys, I hope you enjoyed today's video. Huge thanks to all that hit the like button. iTrustCapital is linked in the video description, and until next time.